What's up everyone? Welcome to video number 8. This video today is about two things. Actually, this is part 2 of the multiple parts of funding that you'll need for your business or your food truck. There's a lot of different funding options, like as I mentioned in the last video, and we're going to break these up into parts just for the sake of time. So today's videos are about crowdfunding and bank loans. I'm going to break these two things down into detail so that you get a deeper understanding of, number one, what they are. I'm sure you know what bank loans are, but a lot of people don't really fully understand crowdfunding. And then on top of that, even though you know what bank loans are, a lot of people don't understand what goes into the underwriting process of getting approved for a bank loan. So I'm going to break those two things down today, and we're going to get a lot of knowledge on these two things so you can decide if these are two routes that you want to go in getting your operation up and going. So for starters, let's start with crowdfunding. Let's talk about what it is, how does it work, different sites and different platforms that you can go to get different campaigns up and going. But essentially, crowdfunding is essentially just fundraising online. I don't know if you've ever seen a raffle or something like that through some sort of community project, or at your church or at your school, or somewhere like that. And they sell raffle tickets to get the amount of money in a pot to get whatever the objective they're trying to get done. Crowdfunding is really similar to that because you're bringing in a lot or a various amount of people into one project to get to a total dollar amount to get to your end goal. So there's different ways to do that, and there's different things to think about when doing that, and that's what we're going to discuss right now. So there are 3 forms of crowdfunding that you can enter to get to your goal. One of them has been around for a while. One of them pretty much started the whole crowdfunding niche, if you will. And then the other 2 are fairly new, one of them being really new. But I'm going to explain all 3 of them. So the first one, and this one is the one that's been around for a while, the one that kind of got crowdfunding to be a household name, and probably how you've heard of crowdfunding, is called rewards-based crowdfunding. Now, rewards-based crowdfunding are traditionally tied to a product that's either in the pre-order stage or that's active that needs to raise funds for. So basically how this works is you'll give funds to a creator, and that creator in turn gives you some sort of reward or perk of that product that they've created. And I'm talking in general terms here because this can go across industries. I know we spend a lot of time on food trucks here, but I'm just gonna give you this in a general sense because not everything's tied to food trucks, but I'm just giving this to you in a general sense. So normally it'll, you'll have a product coming out, like say there's this new watch that has some sort of unique twist to it, or, some product. You see a lot of these type of things, like maybe even on Shark Tank, where, they've raised money this way and then they need additional seed rounds. So they go on the show like that. But it's normally tied to a product in the pre-order phase, and you get a reward or a perk back for your dollar amount that you put towards the campaign. So there are 2 main sites that are used for these sort of campaigns. One is Kickstarter and the other is Indiegogo. And if you look at Kickstarter here, there's a bunch of different topics inside of Kickstarter that you can use to fund different campaigns. So you can see here the arts, you have comics and illustration, design and tech, film, food and craft, games, music, publishing. There's a lot of different areas to touch for this type of fundraising. Of course, we're here talking about food, and you can see that there's a food and craft section here. So, come to a site like this, dig in there, see what other people are doing in the type of lane that you're trying to be in. Look at the landscape, look at how people are creating their campaigns, and then tailor your campaign based off the information that you get on average. Or, once you see a common theme, you can kind of see, all right, well, this is what's working, this is not what's working. Let me tweak mine to say this or say that, you know what I mean? So now if you are somebody who is creating a food truck and you want to look at crowdsourcing or crowdfunding, you need to figure out how you're going to set up your rewards or your perks for donating towards your truck. Because the traditional model is, like I said, somebody who will make like a watch or some sort of invention or some sort of, maybe some sort of product, some sort of physical product that they can ship to someone. Well, you can't do that with a food truck because you can't ship food, and it's just not going to work out. So you have to figure out what can I give them that they can come to me, show me, and I know who they are and where they got that from, and then give them their reward in person. You can do, maybe a t-shirt or, a hat or some sort of physical product tied to your food truck, but they're going to want the food too. So you're going to have to figure out how to tie in the food some way, some shape, some form. So think about those things. And in all honesty, you're not going to see a lot of food trucks on here. You may not see any. I'm not saying that it's an option. It's not a popular option that people use to fund their food trucks. It's available to you, but it's not widespread on this sort of platform. Option number 2. This is called equity crowdfunding. So this is a newer one, and this one, it's almost like a traditional investor coming in, but at the ground floor. Sometimes in traditional investments, investors come in, they can come in at the very beginning at the initial seed stage round, and, they can do that, or they can come in years later when you need to raise funds because you're trying to scale. In this case, they're coming in at the very beginning, the ground floor, and they're investing in the company for an equity percentage back, just like a traditional investment. So as I mentioned, this is a newer form of funding. It was started through Title III and Regulation A of the new Jobs Act. But what I will say is I'm not an expert on this form of funding. Like I said, it's a newer one. I've never used it. And when I was in the research phase of funding my business, this wasn't available. So I'm not an expert on this at all. I would advise you to take this information and then go out and maybe find some other videos from people who are, dig deeper into the research, from people who are authorities in that space, because I'm not the guy on this one. And I'll be honest with you about that. I'm not here to try to talk like or make it seem like I am. I'm not with this. So what I can tell you, though, there are some platforms that do this in the UK. You have Seedroll.com or Crowdcube. In the US, you have a handful more. You got Fundable, you got Seed Invest, WeFunder, Start Engine, Microventures. And Microventures actually works with Indiegogo, so it's one of the bigger platforms. But go out, do some more research on that. Look for other authorities in this space, because I only have a limited scope on this side of it. But what I can tell you is this method of funding, you can find accredited investors, and there are some non-accredited investors. It just depends on the type of funding you're doing, the type of the way that you're raising the money, and the regulations tied to the way that you're raising the money. So there's some options there for you. But once again, look up somebody who's a more of authoritative voice in this space than I am, because I'm not. 3, real estate crowdfunds. So this, of course, will have nothing to do with food trucks. I'm just giving you all the options available here. This will have nothing to do with food trucks, but you can crowdfund for real estate transaction. So a handful of sites that do this are Fundrise, CrowdStreet, Realty Shares, Peer Street. And basically you put together an offering for some sort of sponsorship, and you can do this commercially or residentially. This is a fairly newer one too. It's not as new as the other one, but for whatever reason, everything in real estate can get complicated. It's a large transaction, but it can get complicated. So once again, research an authority in this space, because they'll get you more detailed info on the specifics of these type of crowdfunds that I can't. So let's talk about and this is super important here. Let's talk about what's common amongst them all, the things that you need to have a successful campaign if you decide to go this route. Okay. Here are the things that you need. 1, you have to have a actual fundraising goal. So you need to have an understanding of how much would I like to raise to help me get to the goal that I need to get to. This is super important, super important, because it can determine a handful of things. If you shoot over where you're trying to go, you may not get to the end goal of your campaign unless it's super successful. If you shoot under, then you may not have as much as you need, and then you'll have to go to other outside sources or have another campaign, which probably wouldn't work out. So you have to go to other sources to get money that you don't want to have to get. So your actual campaign size has no cap or no limit, but you need to have an actual number. Second thing you need to have is a duration. You need to think about how long you want this campaign to be alive and the amount of time it's going to take you to hit your end goal. On average, they're usually between 30 and 60 days. The sweet spot is usually about 30 days. But knowing that, you also have to know that what this is going to do is this is going to create urgency from your donators. So, think about your dollar amount. Think about how fast you think you can hit your goal, and set that goal and launch it. So number 3, you need to understand that depending on the platform you use, you have 2 options. The first one is basically keep what you raise, and the second one is an all or nothing type of deal. So keeping what you raise means, let's say you set your goal for $10,000 and you only get to 7,500. Well, on the Keep What You Raise platform, you get to keep 7,500 minus the fees and whatever's associated with it, but you get to keep it. An all or nothing is if you set the goal for 10,000 and you don't hit 10,000, you don't get anything. So there are pros and cons to both. Research what's best for you. You probably would think, well, why would I do all or nothing if I can do Keep What You Raise? But people have different motivations, and there are different ways to sell it. So some people do the all or nothing and they hit all, but there's different ways that you sell it in your marketing that can get you to the all, where the other one you may not. So it's to each their own on this one. So the fourth thing is, and this is absolutely critical here, outside of knowing how much money you want and duration, like this is, I would honestly say this is probably the number one thing that you need to understand and do, and that's making a pitch video for your campaign. Illustrating your offering and talking about your goals and all that stuff is a part of it, but this video and people hearing from you and you explaining what you're doing and your goal that you're trying to get to and the why is going to make or break the campaign. So, not everybody's cut to be great video makers, to talk on video, to sell things and stuff like that. But, and I understand that, and people understand that too. But as best you can, make a video explaining what you're trying to do and the why. If you hire somebody, you can do that. It doesn't resonate as well as it does coming from your voice, from you. But that is an option that you can use, if you want to. As far as the editing goes, if you have the ability to edit, then you have the ability. If you don't, there are places you can go to get the editing done, like Fiverr or Upwork, places like that. Editing is a crucial part to it too, with what you can, put a little budget together to get your editing done, because sometimes the way things are cut and the way things are placed, that plays a role in how people feel and how people perceive what you're talking about. So, but the video is crucial. Spend a lot of time thinking about the video, how you want to come across, study the ways to sell and the way to engage people and to emotionally get people attached to things, because donating to causes like this is really an emotional sell. So understand how to do that and use that to your advantage, and be truthful. People don't want liars on there trying to take advantage of them, trying to get them to buy into something, but use the emotional side of what you're trying to do and use it to help you get to your end goal. And lastly, the marketing side of it. So all campaigns need it, first of all. It's better to assemble a team of people or a coach that'll help you get this done, because strategically there's a way that you can market your campaign to get what you need accomplished. You're not going to be able to just put up a campaign, publish it, sit back and wait for people to read it, listen to it, and then donate to you. You're going to have to push this thing. You're going to have to get it out. The more people that you have that can help you get it out, the better, because that's going to drive a lot of visibility to it, especially since you have a time frame that you need to get this done under. So you're going to have to market this thing. You're going to have to put it places. You're going to have to be vulnerable enough to show that you need help and you need people to help you fund this thing. So the more vulnerable you can be, the more open you can be, the more transparent you can be, the more emotional engagement you're going to get from people that'll donate to you. Even a small dollar amount, people will donate to you. A lot of these places have built-in marketplaces that you can show your posts in that will get some visibility to you, but you still need to get some gasoline lit on that thing, and you still need to get a fire going so people can really, really see it and gravitate to it, because just putting it up in a marketplace or just putting it up on the site alone is not enough. You have to draw some attention to it. All right, so that's all for crowdfunding. At least for this video. Like I said, there's a lot of videos out there where people go into super detail about these things. You can go look those up. But let's jump into banks. Now, I need to tell you and get you to understand something that's critical to understanding the philosophies and the foundation of banks, so you understand why they are the way that they are. And that is, banks are not in the risk-taking business. So I hope you understand that. They're not in the risk-taking business. And that's the traditional institutions. There are, places like Capital One and, a lot of places like that, and even some smaller ones that do different types of loans, like hard money loans and, business loans. They're in the risk-taking business, but your traditional bank or credit union is not in the risk-taking business. That's why you have so much red tape, so much underwriting, so many questions, so much paperwork, so much all this and all that, is because they want to thoroughly make sure that you're as safe as possible if they lend you money. If it's like a car or something like that, that's a quick loan in and out, they take a little bit more risk on those. That's why your interest rate's higher. But when you're talking about tens of thousands of dollars, especially on a business loan, they're going to paperwork you to death and they're going to interview you to death, and that because they want to make sure you're as safe as possible before we give this person, this business, or these people our money. So, and by the way, let me just say I posted it, or I put it up as text in the beginning of the video, but none of this is financial advice. I'm just giving you information to do your own research so you can make your own financial decisions. Okay. So with that being said, let me give you a few criteria of things that will help you get approved faster if you decide to go the bank route. The majority of it's going to be personal information, because when you go to the bank, the underwriters, they're going to look at your personal side and they're going to look at your business side, and they're going to combine both of them and make a decision on you as a whole. But just like investors, especially in startups, investors invest in people more than they do in the actual business. And as far as the bank goes, they're going to look at you personally, because they're, that's what they're essentially investing in more than they are the business. They want to, if the loan goes bad, they want to have recourse, and they're going to take personal recourse to get their funds back, not necessarily just look at it as a business, because a lot of business things get written off and thrown away. So number one, and the first thing you should do before a bank starts to look at you on your profile is have some money in saving as much as possible. I know you're starting a business and that can be hard, but have as much as you can in savings and have it there for at least 3 months, preferably more, but at least 3 months, so that they know that, you have the ability to save, you have the discipline enough to have money sitting there that you're not touching. That all works when your underwriters looking at you trying to decide what kind of person you are. 2, keep your spending habits reasonable, because they're going to go through your transaction history and see what kind of spender you are. If there's 10 transactions to Chipotle a week and all kinds of mall transactions and all kinds of frivolous things, they're going to look at that and see that you spend a lot of time and a lot of money on things like that, and that could be the reason why you can't pay back the loan to them. If that's something that you just have to do, send that money over to a different account. Cash App can even give you a card to use. Just send it somewhere else and do that stuff somewhere else. The bank's going to look at your transaction history and they're going to make a decision on that. These are people looking at people, so you know how that stuff works. Even if it was just an algorithm looking at it, that's actually worse, because the algorithm gives no sort of emotional influence to it at all. It's just a hard yes or a no. So pay attention to how you're spending, where you're spending, how much you're spending, if you want to go to the bank to get a loan. And like I said, if it's something that you can't stop doing, just send the money somewhere else and use it somewhere else so that they can't use that against you. And they'll go back and look at the same 3 to 4 months worth of transactions to get an overall view of you. 3, and this is probably the most obvious, because when you think about a bank, you think about bank loans, the next thing you think immediately after that is credit score. Well, credit score matters, and there are places that you can go and you can get a free credit report that you can look at before you apply. I would advise you not to make a bunch of applications at a bunch of other places before you go to the bank, because they're going to look at your hard inquiries and they may deny you strictly on your hard inquiries, or they may postpone it, because if you got a loan somewhere else, they see a hard inquiry from some sort of institution, but there's nothing shown on your credit report. They know that doesn't mean you didn't get money. It just means it hasn't reported yet. So they may tell you to come back in 30 to 60 days because they want to get an updated credit report to see if anything has been added to it, so they know what you have out there and what you don't have out there. Some people will try to get a loan here and then immediately go somewhere else and try to stack them all up. Well, based on that hard inquiry showing, banks will know that you could either have gotten denied, which they'll start to think, well, if they got denied there, why will we approve them here? What was the reason? Or you have a loan that's not showing yet and we need to wait and see if it pops up. I would advise you, if you're going to go to the bank, to have a credit score of at least 650, higher preferably, but of at least 650. Some banks will look at an average of all 3 credit reports. Some banks just use TransUnion. Some banks just use Equifax, Experian. Every bank's different. You can ask ahead of time, and then you can go and look and see what your score is on that individual credit rating system. And that way you'll know, what the probability is before you put in an application. But I would say at least 650 on all 3. But once again, some banks use only 1, some banks use all 3, some banks use an average of, every bank's different. So just, ask the questions ahead of time so going into it, and you can save yourself time. You can save yourself a hard pull if need be, or you can jump right into it with a high chance of making it happen. You can have business credit too. I'm assuming, and this information is based on the fact that you being a startup and you're trying to get money to start your business, not necessarily be in business trying to get a loan, which if you're already in business, you can develop a credit score. So this information is for people who are in the startup phase trying to get money, not existing, trying to scale. So they're going to look at your personal more than they are the business, because there's no actual business yet to look at in the startup phase and in the position where you haven't raised any money at all. I personally would advise you to have your job, if you're going to do an application at the bank, to keep your job, because they're going to look at that as stability. They're going to look at that as additional income that they can put into your debt to income ratio when they're trying to figure out a loan amount for you. If you're full time in the job, that's going to impact the income that you're going to generate from the business, which also impacts that debt to income ratio for you having the ability to pay back that loan. So I would advise you to go into the application phase saying, yes, I work. This business is something that I'm not doing full time, at least initially, and let them include your income into the application phase, because it's only going to help and show more stability and more ability to pay back. There's a high probability that the bank will ask you for a business plan, so make sure you have one of those available. As I mentioned in previous videos, the things that we talked about already are exactly what you need to have in place for a business plan. I'll also give you one if you want. So if you need one, subscribe to the channel and send me an email at foodtruckbible@gmail.com, and I'll send you a free business plan that's fully editable that you can use that will help you massively in the application phase to the bank. And lastly, the bank's going to ask you if you have any partners, and if you do, what percentage of equity do they own in the business? Because if it's, and every bank's different, but if it's a decent chunk of equity in the company, they're going to want them on the application too. And you may say that they're a silent partner. Why do they need to be on the application? They're not doing anything in the day in and day out, but they own a significant chunk. And once again, the bank is not in the risk-taking business. So if we can add somebody on here that's safer, that has an ability to pay back too, it's in our best interest to do that. I would say be prepared for something like that if anybody owns at least 25% or more. Some places could be less than that, but on average, what I've seen, if there's another partner that owns at least 25%, they're going to want them on the application as well. So be prepared for that. All right, guys, so that wraps up our video today. I really appreciate you joining me, and I hope that this brought you value. If this is something that you truly need and you know somebody else who needs it, send it to them, please. Tell them to like and subscribe to the page. All I want to do is provide value to you here. So once again, if you haven't, like, subscribe, turn on the notifications, all that stuff. If you have any questions, leave them in the comments. I always try to get back as fast as possible. And thank you guys for joining me, and I will see you on the next one.